All right, ladies and gentlemen, welcome to this video. My name is Taylor Bencher. This is the gift that I have for you. We are going to review the BetterAMS P&L for last month, August 2020. Now, the reason why I want to do this and why I think this is a super valuable gift is if you plan to scale your agency or your service-based business to over $100,000 per month, it is very different than when you're doing $20,000 to $30,000 per month. And I think that by going through the P&L line by line and showing you where all the expenses are, it'll give you better insight into what's to come for you. Personally, I would love to see the P&L of an agency doing $500,000 a month or $800,000 to $1 million a month. So kind of like doing this for my future self, because I think you would probably love this as well. So let's get straight into it. I think it's gonna be really valuable insights for you to see what your future is gonna look like. This is the P&L here in QuickBooks, okay? We see RDTD Holdings, that's just the corporation name of BetterAMS. Our DBA is, of course, BetterAMS. The income last month was $101,000. Ignore this $11,500. It's not accurate. This is basically just a wire transfer that a client sent us because that's basically ad spend that we're gonna use for that client's account. But this is actual client revenue. This is retainers that our clients are paying us for our advertising management services. Cost of goods sold, this is kind of how we've structured our P&L, but $642 was lost to incoming wire transfer fees. This is basically if clients pay us, we lose a certain percentage of the wire transfer, and that's the fees for that. General administrative expenses, international wire fees. Again, we're based in Panama, like Central America, Panama. So when we pay out payroll, it's pretty expensive because we have an international wire fee. Pretty much I'm the only person in Panama. So we lose about $2,000 a month just to paying payroll from wire fees. It's pretty ridiculous. CC payment fees is only $23, and that's just credit card payment fees. Offsite travel, so I'm literally 2 hours away from getting on a flight and going to Mexico. That is so that we can have a 5-day, 6-day sit down with the team in BetterAMS to discuss the future and whatnot. Basically, it's just an offsite where we can get clear on the next 12 to 24 months and make sure we're in alignment with where we want to go, especially going into Q4. Travel expenses, we did... a couple of our people in BetterAMS went to Los Angeles 2 weeks ago, and they had a meetup with a bunch of great people that were amazing, fantastic people to meet. So basically, we met some clients in LA. I wasn't there personally. It was Destiny and Alex. They met some clients. They had a meetup. They met some partners that we have down there. It was a fantastic expense because we got to nurture some amazing relationships. Office supplies, $44. So total general administrative is about $7,100. Again, this is kind of off because normally we don't have a $4,400 travel expense. Processing credit card fees, we lost $2,500. That's literally just for swiping the client's credit card. Our bank takes 5%. Stripe takes 2.9%, but again, we're based out of Panama. We can't use Stripe. The software services, we pay about $2,500 a month for different softwares. I would say there's about 15 to 20 softwares there. It's pretty hefty, but not too huge of a price to pay. Web hosting, this is for our website, $107. IT costs, web design, we just redesigned the BetterAMS website. That total costed us about $2,000. This is only showing $1,400 because we paid about 50 or 25% upfront. And so that was, again, a unique expense. Couple unique expenses here that stick out to me are the $4,400 and the $1,400. Contractors, so now we're getting into labor costs. If I was to sum this up, labor cost is $47,054, okay? So that is for about 13 people total. I think roughly half of those people are offshore in the Philippines or elsewhere. And then half those people are onshore, pretty much like from New Zealand, from Canada, from the United States. We got one guy in Guatemala. When I consider onshore versus offshore, I just mean onshore as in these people are making the typical salary range that you'd expect to make if you were living in the United States or Canada. Offshore is more so if you're living in like the Philippines. Again, the salary range is quite different, so that's kind of why I use those two words. So payroll, bank charges, legal, professional fees. We pay our accounting firm about $2,000 a month. They do the books daily, which is why it's a little bit expensive. They also handle AR, and That's pretty much it. They do the books daily and they handle AR. We also have a once a month call. Employee training, $62. Recruiting, I think this is LinkedIn. This might be LinkedIn ads that we ran for recruiting. So $47,000 in labor costs. This is going to be your number one expense. Okay, I don't care what type of agency you're planning on scaling, unless it's a pay per lead agency. Okay, then likely advertising is going to be your biggest expense. But in general, if you're not running a pay per lead agency, labor costs is going to be your number one expense on the P&L, guaranteed. Coffee, this is a perk for our team members. They get a certain amount of money for coffee. Advertising, we don't run ads right now, so this is probably LinkedIn ads, and we need to talk to our accountant about correcting this. Uncategorized expenses, total expenses $61,000, net operating income $50,000. So basically the profit here, it's not $50,592 because again, this $11,500 is inaccurate. So we would just have to minus $11,500 by $50,592. And the margin last month was about 40% profit margin. So about 40,000 of this 101 was profit. Okay. So that also factors in tax because there is no tax in Panama. It's a beautiful thing. Setting up your corporation out here, yes, it has its benefits. So that is the P&L of BetterAMS. Now, if you have questions specifically on certain line items, I know the big one here is labor costs, and I expect some of you guys to have questions here. But in general, I think we probably could have had a 50% profit margin if we wouldn't have done this expensive, travel stuff, and if we wouldn't have redesigned a new website, roughly 45 to 50%. But this is high, okay? These margins are quite high. We, going into 2021, are probably going to push for 30% profit margins, maybe 25%. I don't think I'll go down below 25% profit margins. We shoot for 35%. That's our target. If we close the quarter with 35% profit margin percentage, we will pay out bonuses to basically everybody on our team. And we're planning on pushing the margins down a little bit just so we can grow faster. So hopefully this is insightful to you. Keep in mind this was a very good month, and profit margins are not normally 40%. Okay, that is above our 35% target. And again, they could be 40 to 50%, but we're running it a little bit lower so that we can try to grow faster. So hopefully this was insightful. Hit the subscribe button. If you have not hit that sub button, then hit the sub button, because when we get to 2,000, I'm going to release a legendary gift that is probably 10 times better than this. Hopefully, at least I think. Let me know your thoughts in the comment section below. Hit the like button. It'll really help get this video boosted and out to more agency owners who want to see what their future is going to look like. So thanks again, guys. Much love, and I will see you guys in the next video. Ciao.